Thanks, guys, for coming at the last minute. We want to welcome you to the last chance to get a tax crash course for eBay sellers, sponsored by the Top Rated Seller Webinars. Our presenter today is Priyanka Sharma. Laura had another engagement. She couldn't make it, so we've got Priyanka, and we know she's got it covered, so we're happy to have you. So welcome. Housekeeping quickly. Yes, the webinar is being recorded. Yes, you will have a chance to look at this video later if you missed it or want to go back. Yes, you'll be able to see the slides. And if you're having audio problems, as always, on the computer, try using the call-in number. If you're having problems with your phone, hang up, try another line, call back in. Make sure you stay connected to Top Rated Seller Webinars at pagemage.com/Top Rated Seller Webinars. You can sign up for our great newsletter, get selling tips, more webinar info, and advice. It'll also give you the links to watch recordings of our old webinars. We want to thank our sponsors, because without sponsors, there would be no Top Rated Seller Webinars. We are sponsored by eBay Radio, where you've got the Griff, live every Tuesday and Thursday from 11 a.m. to 2 p.m. Pacific Time, found at ebayradio.com. We're also sponsored by Cabbage with a K. Get your money fast. Grow your business with Cabbage.com. We want to make sure you stay connected. Again, in addition to the newsletter, we also have a very active, growing Facebook group. You can find that group by searching Top Rated Seller Webinars on Facebook or going to facebook.com/groups/TRS webinars. We are also active on Twitter, and you can hashtag TRSW to participate in the conversation there. Our sponsors, again, we're sponsored by Social Beacon. Social Beacon is specially created for marketplace sellers like you and helps you easily promote all your sale items across multiple social networks. Share your first item in 5 minutes. It's that simple to set up, and it's free. Check out Social Beacon at pagemage.com. Another sponsor is stamps.com, the postage in your PC company. Import your orders from multiple marketplaces and get that stamps.com feeling. Also sponsoring us today and presenting today is GoDaddy Online Bookkeeping. You may have known them formerly as Outright.com, which is where you can put your accounting on autopilot, understand your sales, organize your business, and especially focus today on preparing your taxes. Check out GoDaddy Online Bookkeeping, still found at Outright.com. We're also sponsored by Terapeak, because Terapeakers make more money. Don't forget our connectors, Kat Simpson, that's me, of thatcat.com, and Karen Locker of Solutions for E-commerce. Our next webinar, It's Okay to Cheat on eBay, with Amazon, that is, and that'll be presented by me, Kat Simpson, on April 23rd. You can sign up at pagemage.com/Top Rated Seller Webinars. Now we are ready for the last minute taxes crash course for eBay sellers by Priyanka.
So let's get started here. Thank you so much, Kat, for that wonderful introduction and getting all the housekeeping done. You're always amazing.
Thank you.
And let's get started. So, as I said, as Kat said, this is our 1 and 2 of the last minute tax webinars we're doing. We realize here at GoDaddy Online Bookkeeping that taxes are a pain. And many times people just put it off. It's like, oh, let's do it later. Let's do it later. That's what used to happen to me too. So what we want to do is be here for you as you're figuring out your taxes last minute and help you get it all done. So this is a disclaimer from our lawyers. They just made us do it, saying, we're not tax attorneys, basically. That's the TLDR of it. Then let's look at what we're going to discuss today. Today we're going to talk about who needs to pay taxes. Usually, it's usually everyone. Then how to fill the income tax return, the dates, and then how to calculate the taxes owed, along with things like deductions, how to handle your income from eBay, 1099K, expenses and COGS is one we'll cover as well. Go over briefly sales tax and use tax. We'll cover drop shipping and consignment, and finally we'll talk about how GoDaddy Online Bookkeeping can help. So, who needs to pay taxes? Is it a business? Is it a hobby? So the key point is, it's a business if you run it with the intention of making a profit, and if you've been profitable in the 3 out of 5 last years. And finally, if it's something you're depending on the income for a living, then it's definitely a business. We always recommend that you play it safe. Even if you make $1 of profit, count it as a business and file your taxes. The best thing is, if you do file this you get a lot of deductions on many things you spend on to make the eBay selling happen. So it actually is a great deal. Also, it's not worth it to have the IRS up on your back because you didn't file taxes for um, a profit. Just
Amen. You don't want the IRS coming after you. Priyanka, they're asking you to speak a little bit louder. They're having a little trouble
oh,
hearing you.
sure. Sorry about that. Is it better now?
Oh, that's better. Yes.
Awesome. Okay. Yeah, I have a little bit of a sore throat, so sorry about that. Um, okay. So yeah, so the basics on whether it's a business or a hobby is if you make a profit, just file the taxes. So now that we decided that we're all filing the taxes, when are they due? Very soon. They're due on April 15th every year. The main forms that you need to think about are, excuse me, the Form 1040, and this includes the Schedule C, which is where you report your self-employed income. And then there's the self-employment tax that you report through the Schedule SE. So the Schedule C is usually the hardest piece for most people, and that's what we'll be covering mostly here. Something to keep in mind is estimated taxes. Estimated taxes is usually a fourth of what your annual income tax would be. So that's usually due 4 times a year, right? It's estimated and quarterly. So for 2014, it was Jan 15th for the last installment of 2013 taxes. Then it'll be April 15th, June 16th, and September 15th for this year. If you owe more than $1,000 in yearly income tax, you should be paying estimated quarterly taxes. This is just, I know while it makes taxes happen 4 times a year, it actually keeps things simple and also in check, because by doing quarterly estimated payments, what you're making sure of is that you don't have a crazy tax bill at the end of the year and have to scramble for money. It keeps you aware of where you're at financially. So definitely recommend making sure you're doing that if you're owing more than $1,000 in taxes. The one thing to note is just if you're filing a tax extension, it's due, the taxes are due October 15th in that case. So those are sort of the dates to keep in mind. I'm sure everybody here is well aware of them at this point, and it's sort of about let's get the taxes done. So let's move on. So what are you taxed on? This is the critical piece everybody needs to remember. You're taxed on your profit. What is profit? Profit is the money that comes in, which is revenue, subtract the COGS, which is cost of goods sold, and also subtract the expenses. Excuse me. As you see here, COGS and expenses are separate. We'll go into detail of how COGS works in the later part of the presentation, but this is the most important thing here. As you can see, if you have higher expenses than COGS, that reduces your revenue and that reduces your profit. This is where deductions really help, and having documented business expenses really, really helps. But at the end of the day, you're taxed on your profit. Deductions and expenses. So these are important because when you take a deduction, you reduce your taxable profit. So there are many, many deductions out there that you might be eligible for. Everybody's case is different. However, some really common ones are, which people actually sometimes forget to take, are like the home office deduction. 9 million people in America are eligible for it. Guess how many take it? Only 3 million. So don't be one of the remaining 6 million. If you're eligible, take that deduction. Then there's mileage. If you travel for work, such as going to a store to purchase inventory, that's a business trip. So that's mileage. Retirement funds, if you plan for your future, which everybody should, it's again a deduction. There's like legal fees, expenses of going into business, bad debt, business entertainment, travel, interest, new equipment, etc., etc. Ironically, business software such as GoDaddy Online Bookkeeping is also tax exempt, so you can take that as a deduction. That's kind of, the software that keeps on giving, kind of. In order to learn more about these deductions and what you can be using, we recommend looking at Cliff Anico's book, the eBay Sellers Tax and Legal Answer book. This goes into major detail about all these deductions and can be a great resource. So if you have the time, you can look into this book. I think an online version is also available for those of you who don't want to wait for it in the mail because taxes are so close by. So the home office deduction, as I mentioned, it's very important because many people are eligible and many are not taking it. So don't be one of those people. Now, there's some good news on the home office deduction. A lot of times people didn't take the deduction because it was so hard, you know, getting all the paperwork in order, because you have to look at all your expenses and check out what, measure the part of your room that counts as your home office, and et cetera, et cetera. So many people didn't want to go through the hassle. They thought it wasn't worth it. But now the IRS is actually offering you 2 ways to deduct the home office deduction. First is the standard actual expenses method. What this means is that you look at your home, all the utilities bills, the rent, the mortgage, everything, and you make sure what the full square footage is, and then you look at the square footage of your office space. Let's say it's in a guest bedroom and half the room is devoted to the office. You measure the square footage, and then the percentage of the house that square footage is, that's that percentage of the expenses towards the house are counted as a deduction. So that's the first sort of more tedious way. Now they've introduced a new flat rate method. What this means is you look at the square footage of your house and multiply it by $5, and then you get your deduction. Keep in mind the maximum amount here is $1,500. So if the square footage is 300, you're good. But let's say it's 400, then you sort of lost some money on the table. So it depends. Knowing that, it depends which method is better for you. Flat rate's better if it's straightforward, right? Like you have like under 300 square foot, and also if the expenses on the entire house are such that $5 per square foot is reasonable. Those are the 2 things to look into, right? If so, go for the flat rate, super easy. But let's say your office is bigger, the expenses are higher, then you want to do the actual expenses method, just to make sure you're not leaving money on the table. Now that we're clear on how to get it done, just some key points about the home office deduction are, if you're taking that deduction, you need to make sure that's a space you use regularly and exclusively. Now, what does that mean? Well, that means that there's a space in your house which is where you have, let's say, your desk, your cabinets and filers, and you go there regularly, just do your work. A good way to prove that you regularly and exclusively use this space is to take a picture of it, of your office, and use it as a record. Because if I see an image like the one shown in this presentation, it looks like an office. I believe it, right? It's obvious that you can't use that space for anything else because it's so professional. That's the kind of thing you need to make sure of. So take a picture and make sure it's a space you use regularly and exclusively. An example of what is not regularly and exclusively is, let's say you have a guest bedroom and you spend some time on the bed doing paperwork. That's not regular and exclusive use. So that's a good way to think this through. I just want to do a quick sound check. Can people hear me fine?
I am not hearing any more complaints. I think that we've got the sound good. I'm sorry for your sore throat. I know that hurts. I did have something from the audience to add here. Number one, they want to make sure everyone understands that in addition to the square footage for your desk and your files and stuff, you can also claim the square footage you use for storage. So if you have a bunch of your eBay inventory stored in a closet and it takes the entire closet, that is square footage you can claim. If you have inventory stored out in the garage and it's only for your that space in the garage is only for your eBay inventory, they can claim that as part of their office. Is that your understanding too, Priyanka?
Yes, absolutely.
Okay. Second question was from Cheryl. She wants to talk about the extensions that we talked about earlier. She wants to remind folks that you can place the extension and your taxes aren't due until October, but, your filing is not due till October, but if you owe any taxes, you are supposed to pay them by April 15th. So if you think you owe taxes and you think you owe $1,000, then if you can file that extension, you need to go ahead and pay that $1,000 on April 15th, but you don't have to actually turn the paperwork in till October 15th. Can you explain that a little bit, Priyanka?
Yes, absolutely. So that's completely correct. If you owe taxes, like you're gonna pay money and it's gonna be 1,000 or more, even if you file an extension, you need to pay the money in time. It's more that the paperwork can be done by October.
And that was all. Thank you, Cheryl, for that. We appreciate that.
Yes, absolutely. All right, awesome. Now I'll move on to the next deduction we're going to talk about, which is the retirement contribution. So, good news is that the retirement plans aren't just for big company employees. As a self-employed person, you have the right to plan for your future, and you can defer your profits and taxes until retirement through some programs such as the individual 401k and the SEP IRA. Um, Obviously, highly recommend people plan for their futures and look into these because it's the same thing as being employed by a big company where people plan for their future and invest in the 401k and IRAs. So that's something you can do, and it's tax deductible at this point because you're deferring your profits and taxes until retirement. Mileage. Now, this is a big one, and it usually applies to anybody in business, unless you focus on life in a basement and online orders and never go out. So, in terms of tracking mileage, first of all, you get to deduct round trips that are business trips from your place of business or home, whatever you want to call it, as the deductions. Now, the key point now is to track that mileage, right? You want to make sure it's accurate. There are many ways to do it. What we recommend is actually using an on mobile application to track because you have your phone on you at all times. And what that does for you is if you have an app, you can just say start trip and then end trip and record as you're on the go. You don't need to remember to come back home and enter it on your desktop. The GoDaddy Online Bookkeeping app is available for your smartphone and it does mileage tracking. This is some good news for you guys, by the way. It's available on iPhone and Android now.
Woohoo! That was the number one question last time we had this announcement.
Absolutely. So it's available on both Android and iPhone. So go download it and you can use it for mileage tracking. That's the quick and easy way of doing it. The other way to do it is just note things down in a diary or something like that. So yeah, and so you get round trips. Now, there are two types of deductions that you can take here. It's similar to how, home office has the simple way and the complex way. The simple way is 56.5 cents per mile driven for business. This is, by the way, different from last year where it was 55.5 cents per mile. So either you take that simple deduction or you look at actual vehicle expenses such as gas, maintenance, repairs, on the percentage of the annual mileage used for business. I think, again, here you need to look at what is worth it for you. It might be that you drive a little bit, and so the 56.5 is simple and easy. However, it could be that your vehicle expenses are a lot, and net, it comes down to 56.5 cents per mile is not accurate or fair. In that case, you want to make sure that you do the actual mileage used business method. Also, if you use the car exclusively for work, then it might be better to just deduct the entire expense for the vehicle during using the longer method. So again, it really depends. Make sure you don't lose money on the table, but also don't kill yourself over it. My recommendation to people when they ask like, oh, I'm really stressed out, which one should I take, is if taxes are really close and you're worried that it'll be a little too hard to do the actual expenses method, then at least get the 56.5 cents per mile. So if it's too hard, then get the simple one. But if you have the time and energy, then of course, look at where you're going to get the most benefit financially.
Okay, before we leave the mileage deduction, we have a couple of questions, and I wanted to ask something for past people. Sandy says, not everybody owns a car, and that is so different for America. Most of us are used to own a car, but she says, I don't own a car, so can I deduct the cost of my bus passes, which I thought was a very interesting question.
And the answer is yes, it just becomes a business expense. Now, the bus pass, again, if you're using the bus pass for,
grocery shopping. Right.
Yes, exactly. And so in that case, there's you should probably sort of look at the percentage of use and deduct based on that. But as a business expense, it completely applies.
Okay. And the other question I had was, I know a lot of folks have not been keeping track of their mileage. And I was just having this conversation with a client the other day. Is there any way they can prove what mileage they spent? And my advice to them, and I'm wondering what I would like to hear your advice first. If I haven't been keeping track of my mileage, but is there any way I can go back and figure out what mileage I did last year?
Yes, so obviously that's not an ideal scenario, but our recommendation would be to make a list of the frequent trips you make or any big ones you know you made, right? That were for business, and look into your accounting to see. So, for example, let's say you go to the Walmart a lot for inventory shopping, right? And you know you do that. So, what you can do is look into your bookkeeping and see how many times you have receipts from there that are business ones, and you know the distance round trip distance, so you could do it that way. So that way you also have proof, right? Because you have the receipts from the inventory shopping you did there. And then if let's say you also made one big trip to a Target about 50 miles away because it's a really good one, and you know you made that trip, so then you can sort of calculate using Google Maps, and you have the receipts from the purchases there, so everybody knows you got there. And you can do it that way. Of course, it's not ideal, but it's a good way to patch together things. That's my recommendation. Kat, what's yours?
Exactly the same. I'm so excited. I told her to use Google Maps, especially for her regular trips. A lot of people don't realize, and hopefully most of you aren't going to the post office, but as an easy example, a lot of people go to the post office every single day. And it may only be a mile to the post office. That's okay, but that's a mile every day. So keep track of that.
Absolutely. Awesome. Any more questions, or should we move on?
Yes, go ahead. I just was trying to get rid of that sound, so go right ahead.
Awesome. All right, so now onto this big topic of cost of goods sold. So as we discussed back in the beginning, if you see here, cost of goods sold is very important. Why? Because you deduct it from your revenue in order to get the lowest amount of profit on which you will be paying your taxes. So let's look into that. So what is cost of goods sold? Cost of goods sold is the cost of the products that you made or you purchased to sell online. Now, well, the biggest thing to know about cost of goods sold is you can only apply them once you've already sold the good. So we're going to go into an example here to explain. And generally, as an online seller, the cost of the inventory that you bought is your cost of goods sold. Now, let's look into an inventory example, right? Key point, again, you can only deduct what you've already sold. So let's say in January 2013, you bought 100 widgets at $1 each. So that's total cost is $100, right? Excuse me. So in your inventory at this point, you have 100 widgets, and the expense was the cost of goods. Expense was $100 to acquire those. Now December 31st hits. You sold 75 of those widgets, but you still have 25 left. So your cost of goods sold will be the cost of the 75 widgets sold, which in this scenario is $75. So your COGS becomes $75 for 2013, and the remaining 25 widgets go in carryover inventory from 2013 into 2014. And ideally, you'll be selling these 25 widgets in 2014, and the $25 they cost you will be COGS this year. So what this example is trying to illustrate is it doesn't matter what you bought unless you sold it. And so if you sold it, in that case, you can make the deduction of the cost of goods that you sold. So keep that in mind, and that's really helpful when you're figuring out taxes. So now, the other topic that's really important is Revenue Form 1099-K. At this point, everyone who should have received a form has probably done it already. The 1099-K is a form that PayPal will send you um, and to the IRS to report your eBay revenue. So you're getting the form and the IRS is getting the form. So you get the form if you met or exceeded 20,000 or more in sales and had 200 items or more sold. So if you're some baller watch seller and you sold 4 watches for $5,000 each, you won't get, which makes it $20,000 in sales. You won't get the form because you only sold like 4 watches, not 200. So that's kind of how the form works. You already have it if you were supposed to get it. The key point here is that it reports gross revenue. It's literally just looking at all the money that came in from the customers. And so what you need to make sure are a couple of things. One is that you need to make sure that you utilize this form for your benefit, which is check the gross revenue numbers that you have in your Schedule C and make sure they're equal to or more than this 1099K form. And the key point here is gross revenue, because once you've declared the gross revenue, you want to make sure you remove the sales tax collected, the shipping revenue, sales that were returned, and like you need to make sure that you are removing those in the net profit. And it also doesn't include any COGS, expenses, deductions, obviously. So this is very, very gross revenue. You just need to make sure that it's equal to or lower than what you report on your 1040 Schedule C. Now, as I said, reconcile the 1099K is really important. So first thing, once you've gotten it, you want to make sure it's accurate information. So if you look at the numbers and it's strange, you still have time. Contact PayPal and eBay right away. Tell them there's a mistake and get them to fix it. Anybody can make a mistake, even big companies. So that's that. Then once you've figured that out, then you look into your bookkeeping and make sure that the gross revenue is equal to or higher. Why would it be ever higher? It can be higher if you sell on eBay, but also, let's say, take local orders or sell on another online seller, such as Amazon. So you obviously need to be higher there or equal to the 1099K, depending on what all the sources of income for you are. Once you've done that, this 1099K has been very useful to you because you've removed a flag that the IRS uses to decide on audits. So if the 1099K is equal to or less than your gross revenue on the Schedule C, that's a good thing for the IRS. Once you've done that, now another thing to note is if you're doing things manually, bookkeeping-wise, it's going to be a little hard to make sure that the calculations on your gross revenue are accurate. This is where using an online system such as GoDaddy Online Bookkeeping is extremely helpful, because it's been populating what your income and expenses were for forever, and it tells you auto-populated in the Schedule C what the gross revenue it's seeing is, and you can check with the 1099K in minutes to see if that's accurate or not. It's very easy and fast to do it that way. Yeah, so utilize the 1099K to the best of your advantage. It's actually your friend because it will protect you from audits if you make sure to reconcile it. As I said, double checking is critical. Now that we covered the 1099K, I'm going to move on to the...
Okay, before I let you move on and get into the other quagmire of taxes, can you go back a few more slides back to the cost of goods slide? We had a couple questions on cost of goods. Anne says that she's confused where she can find her end of year cost of goods, because she says when she goes to Amazon December 31st, she can't pull up a report for December 31st. And I know that's true because I'm facing that with one of my clients. They did not pull a valuation of their inventory on Amazon in FBA for December 31st. So I don't see a way for them to do that except to do to their best of their ability, try to figure out, what they had then. Do you have a better answer for that? Because if you're an eBay seller, your inventory is right in front of you, and you should be counting it on December 31st. If you're an FBA seller, you should be pulling a report of what's in the warehouse on December 31st. But if they did not do that, is there any way they can figure this out?
Sure. Obviously, not the best case scenario.
Like the mileage.
Exactly. However, my recommendation in this scenario would be that look at your bookkeeping records, see all the items that you bought, right? And the inventory you collected, and then you sent off to FBA based on the shipments you made, and then separately look at all the income that's come in from Amazon. Now, if you're using online bookkeeping, it makes things easier, but if not, that then it'll be a little hard and messy. But you look at all the revenue report, at all the revenue you've made on Amazon, and see, and it tells you what item was the revenue for as well, and then do a sort of manual deduction process of, okay, I bought 50 items from Walmart and sent them all to the FBA, and here I'm seeing that I have 20 sold, and 30, that means 30 must be left in the warehouses. That's my recommendation. What do you think, Kat?
I think that's the best you can do, really. And I keep going back. You and I both love Cliff Enico, the lawyer, and I keep going back to his saying, with the IRS is like a dog, and even a dog knows whether it's being tripped over or kicked. So I think, doing the best you can and honestly trying to determine what your inventory value was on December 31st is the best they can expect. In the future, make sure that you have an inventory valuation on December 31st. That's about all I can say about that. Now I feel like Tom Hanks. That's all I'm going to say about that.
I knew you were Tom Hanks in disguise.
There you go. I'm Cliff Enico and Tom Hanks. Okay, couple other questions on cost of goods. A good one from Michelle. Priyanka, I buy something to sell, but it turns out it doesn't sell, so I donate it. Where does that expense go?
I see. So that is definitely not a cost of goods sold. That one thing is clear because you donated it, right?
Mm-hmm.
And it wasn't sold. You could probably take a charity deduction on that one. That's
Okay.
what my
Yes, and definitely check your accountant, because they differ on whether you can take the deduction for the value of the item it should have sold for, or the amount that you paid for it. I've heard both pieces of advice, and since I'm not a CPA, I'm not going to say which one I think. You want to venture a question on that, Priyanka?
I'm sorry?
Do you want to venture an idea on that, whether they should take the deduction based on what the item should have sold for or how much they paid for it?
So again, our recommendation always when it comes to taxes is being conservative, right?
Yeah, right.
And so our recommendation would always be to pay the get the deduction on what the item was bought for, because it's going as charity now, right?
Mm-hmm.
And so sure, maybe there is a higher value that the good had, but it's going for charity, and the safest deduction you can take is just the face value that you paid for it. Of course, talking to an accountant, you might figure out a way to do it for the actual value for which you would have sold. However, you would need to work with that accountant on that, and also it's sort of like it's a little bit more of a flag for the IRS than it is, oh, here's what it was bought for. It's
Right.
simple and easy if you do it straightforward.
Keep it simple, folks. I love that advice, Priyanka. Okay, another question about mileage and cost of goods. So if I go to a Toys R Us, for instance, to source something, but then on the way home I stop for a gallon of milk, are those miles still business miles and are deductible?
So here's the question. If you're driving back and right there on the way, without changing route, there is a Walmart for milk, that's on the way, so it wouldn't be an issue. However, if you're changing your route and adding miles, those miles don't count.
Perfect answer. Love it. Okay. Great question from Mary Bennett. What about damaged goods? I buy this thing for $10 to sell, and when I go to list it, I realize it's damaged and it's trash. What do I do with that expense?
Oh, well, ideally you would return the goods.
Okay, let's say my dog ate it. Okay. That's a better one.
Pretty funny.
Oh.
It definitely doesn't count as cost of goods sold because you didn't sell the item. In terms of it getting damaged, it's you could potentially take a deduction based on it being, depreciation. But Kat, I'd actually like to hear your opinion on that.
There's usually a place on there for bad debt or things you write off. And I have widely interpreted that as items that I, couldn't get, like customers that didn't pay, that kind of thing. That's another thing you would definitely want to ask a CPA. That's, yeah, yeah.
Yep, but that makes total sense to go for the bad debt
Yeah.
scenario.
Well, customers that can't pay and that kind of thing. And great comment from Sandy. She wants to make sure we let people know that although it was supposed to be mailed out, PayPal did not, in fact, mail the 1099s this year. So
Oh,
if you didn't get one in the mail, don't think you're off the hook. You should go into your PayPal account to the download section and download that 1099. I did not know that.
yes, thank you so much for
Yeah.
that information.
Thanks, Sandy. I don't know if she didn't say if it was everyone or some people because I thought I had gotten one, but we'll see. Anyway, if you didn't get one from PayPal, go check and make sure you're not missing it. All right, I promise I'll let you get back to where you were now. We're all caught up.
Awesome. All right, let's move on to sales tax. This has been a pain for many people. So here's something I would like to say upfront before even discussing in detail. A lot of questions we've had in the past were about how the Marketplace Fairness Act played into this. I'd like to say that that act is not passed yet and it doesn't play into this. There is nothing to think about. Like that's all news stuff for the future. It might pass, it might not pass, but the Marketplace Fairness Act and similar ones are not in effect, and so don't let them confuse you. All you need to think about when you think sales tax right this second is about your nexus. Nexus is something that is unrelated to the Marketplace Fairness Act, and whatever we'll talk here, it's been in presence forever. It's not a new thing. It's it's been in Nexus has been in the laws forever, and don't confuse yourself with the Marketplace Fairness Act to think that it's new as well. Having said that, now I will go into the discussion. So what is Nexus? Nexus is wherever you have a physical location. Now, it could be where you live, right, or your offices. That's definitely what you have Nexus in that state. If you go to sell at out-of-state craft shows, or you have people who are helping you, or they work for you and they're in some other location, that counts. So anywhere where your business is operating from is your Nexus state. So you got to figure that out. You should investigate what states you will count for Nexus, right? And once you found that out, then you got to register in those states. You go into those the information sites for those states and you read up on the requirements. Unfortunately, every state is different and will have different requirements on the rates, how to set things up, what items are exempt, and how to register and collect and remit the taxes. So sadly, you have to go state by state and look into it. It's really important to do just to stay on the right side of the law. Now, let's say you live in Kansas and that's where you are selling from, then Kansas is the only place you need to worry about. However, let's say you are also doing FBA, then you would actually have nexuses on the place in every place Amazon has a warehouse. So we'll get into consignment and dropship later, but that's kind of how it works. In terms of sales tax, you should just set it and forget it. When it's Amazon, they charge you a fee, but they collect for you. eBay can actually collect for you for free, so that's really awesome. So collection-wise, you can set it up through these services, through the online seller you work with, online platform, selling platform that you work with. Another option, some people take it, some people don't, is don't collect it, but bake it into the price and pay it anyway. So it's a little challenging to do it that way just because you have to be extremely accurate on the amount that you collect and remit in terms of the percentages. So let's say the sales tax for something is 5%, 5.4%, and you sent in 6%, then it counts as you having been fraudulent to the customer. So not the best way, but it's an option out there. So just collect everything. If you're using an online bookkeeping solution, it's easy to keep track of whatever you collected, and then you mark it as remit when you've sent in the payment to that state using the method that they prefer. So that's how sales tax should be done. This is generally a bookkeeping, sort of year-long bookkeeping thing because you should have been collecting and remitting over the past year. If you haven't done so, if you haven't set it up well, we recommend you set it up right for 2014. So there's another parallel to sales tax, which is use tax. Now, what's use tax? Use tax is basically the opposite of sales tax. If you purchase an item in another state and didn't pay sales tax on it, um, then, oops, apologies, then you owe an excise tax called use tax. And if it's a business purchase, though, then you do not need to pay the use tax. So when you buy inventory in another state, give the seller your resale certificate and your resale number, and that will avoid the use and sales tax for you. Use tax is usually for personal purchases, or like, if I bought something from somewhere where I didn't need to pay sales tax, I should be paying sales tax. Use tax. Usually the use tax is the same rate as the sales tax because, as I said, it's sort of the mirror of it. All right. Now to briefly touch upon drop shipping and consignment sales. We're not going to go into too much detail here. However, just want to cover it briefly. When you do drop shipping and have a consigner, you have nexus for sales tax wherever these people are located. So, for example, if you're in New York, excuse me, if you're in New York and you drop ship for a company in Ohio that has physical locations in Ohio and Iowa, then you pay New York sales tax when a New York person buys. You pay Ohio sales tax when an Ohio person buys. And you pay Iowa sales tax when an Iowa person buys. So if someone from California buys, you don't pay sales tax. You don't collect sales tax or pay it. So that's something to keep in mind. You should make sure if you drop ship and do consignment that your contract explicitly lists where the locations for those people are, and you need to warn the residents of those states to make sure that they know that sales tax is going to be added to their winning bid or buy it now price. That's sort of something you need to do. eBay is very helpful, and you need to look into your settings to figure out how to do all that, but it's really important to make sure you're doing those things. There's a lot of sample forms and stuff that you need, and you can look into Cliff Beneko's book for that. He also goes into more detail about this topic, which I know is a complex one. So if you have a lot of sort of special scenarios and confusions, highly recommend you checking out his eBay Sellers Tax and Legal Answer book.
Priyanka, Anna Maria has an interesting comment here, and it's similar to this in Florida. She says, in the state of Nevada, you're supposed to pay use tax even if an item is used and is in your business, not just personal. So state laws can be very different on use tax. I know in Florida, when we owned a business there, we had to pay the use tax on the equipment in our business every year. So we would pay use tax on our computers in 2013 and then pay use tax on the same computers in 2014. Based on a reduced value, of course, but every year you were taxed. Yeah, there's lots of ways of getting taxed from people. So a good point from Anna Maria that some of these tax laws in different states are very particular to that state, which is why it's good for you to have a CPA who is experienced in your state.
Absolutely agree, and thank you so much, Anna Maria. State laws change everything many times, so please do work with a CPA to make sure you're compliant on all fronts.
And she had another great idea. I knew that the bad debt was part of the issue, but there is a place on your form for breakage. And Anna Marie says that she deals with a lot of china, which of course means a lot of breakage. And so she takes a picture of the broken item, and then she includes that value in a line item called breakage. So that's how she handles that. So for the damaged items, that makes a lot of sense. I appreciate that.
Absolutely, that makes a lot of sense.
And we also had a question back on mileage, if you're ready to go back that far yet.
Absolutely.
What if we're on a personal trip? We're going on vacation to see family or something, and while we're there, we go do some sourcing. Can we then go back and write off some of the mileage of that trip?
So if you go on vacation and then let's say you're on vacation, you're visiting Kat in Florida, and The two of you go sourcing. Then the trip from Kat's house to the location where you buy, that would be your business trip, but not your trip to Florida.
Darn. But you can still come see me when I move back to Florida. I'm stuck in Arkansas right now. But and Anna Maria makes the point that the description I gave you of the Florida use tax is the same in Nevada. And I find that very interesting because neither Florida nor Nevada have state income taxes, but they both handle use tax that way. So see, they're going to find a way of getting that out of you, right, Priyanka?
Absolutely. They're
Oh,
on
my.
it. Awesome. More questions?
I think we're good on that. You're allowed to go back where you were now. I keep making her flip back pages. So there we go.
Awesome. All right. So now that we have gone through all these different scenarios and ways, to get done with taxes and all that's required of you, you're like, okay, dude, it's April, what date is it? 4th. 10 days, 11 days to do taxes. How do I do it fast? This is where GoDaddy Online Bookkeeping can help you. So the GoDaddy Online Bookkeeping product, it's a bookkeeping and accounting tool that you can use. It's $9.99 a month, and what you get is very quick reporting. So what you would do is you would actually you would connect your bank, you'd connect your PayPal, any other source and credit card, etc. And that would give it all the information it needs to auto-categorize everything, income, expense, everything into the system, and at a glance tell you what the profit is. And once you do that, it also has tax forms for which are pre-populated. So you see here there's a taxes tab. When you click on that, you go into the Schedule C worksheet like you see here, and it's already populated for you. So if you want to do taxes quick and easy, this is a great way to do it. You will get a year back of information from PayPal, so you're good there. For banks, it kind of depends. So usually they give like about 3 months, and then if you ask them, they'll send you a big file of all your data for the remaining months, and you can upload that into the system, and it'll do its magic of auto-categorization again. So if you want to do taxes fast, this is a great tool. We recommend you go use it. And the way to access it, there are a couple of ways. One is you go into the eBay App Store, and it's listed as Outright, which used to be our old name before GoDaddy bought us. And you can purchase the $9.99 product there. You can also, this way it's easy because you can access it through your eBay portal. Another way is to go to GoDaddy.com and look for invoicing and bookkeeping in all products. That way you can go get stuff done for taxes right away, really fast. I'm happy to answer any questions on setup, etc. if somebody has any, but we recommend it for quick tax prep.
Absolutely. I can't recommend it highly enough. I think I've been using Outright since it was in pre-beta. And I can't imagine doing bookkeeping without it. I think we've caught up to all of our questions. So you guys, the question was, is this the same as Outright? Yes, it is. As Priyanka said, it was Outright.com was the name of the company. And that great big huge company, GoDaddy.com, purchased them. So it's now referred to as GoDaddy Online Bookkeeping. I believe you can still find it at Outright.com is the web address still, Priyanka. And in the eBay App Center, it is still showing as Outright. So that's where you can find it. I can't imagine doing taxes without it, honestly. And they're even getting, with the sales tax and the mileage app is getting even more useful. Again, Outright.com has a free version. But if you want the Schedule C worksheet, you're going to need the $9.95 a month. And as Priyanka told you, that is tax deductible. So let Uncle Sam pay for your accountant. I kind of like that plan.
And you can you can buy the paid product on all, like everywhere. You can buy it through the eBay App Store, you can buy it through Outright.com or through GoDaddy.com.
Okay, so this is your last chance. You've got a tax specialist here and me, the mouthpiece. So go ahead and ask your last questions before Priyanka has to go and help some more people do their outright accounting. If you have any last minute questions, now's the time. I think we got them all. They're all sitting there realizing how much work they have to do, I think. They're going, oh, man.
We have a surprise present for everyone.
Oh, a present. We like presents. Okay. Tell us about a present. Yay. I don't have a sound effect, so I'm just going to clap. There we go.
So, if you're looking into doing your bookkeeping, which you probably are since you're on this webinar,
Mm-hmm.
and taxes, as well as have thoughts about maybe getting your personal branding done, such as, having an email that has your personal domain, such as
Cat Simpson. There you go. There you go.
Exactly, something like that, and would like to get all that stuff, we're offering a package deal. So if
Awesome.
you buy 1 year of GoDaddy Online Bookkeeping and you buy 1 year of Website Builder Business, then you can use the promo code eBay Radio to get a 50% discount. And so for
Wow.
about $119, you get 1 year of bookkeeping, you get 1 year of Website Builder, which basically makes a website for you, and you get a domain free and your own email address with that domain.
Okay, so a year of outright would cost how much by itself?
By itself is $99.
$99. So if we go to GoDaddy.com, purchase 1 year of outright and 1 year of Website Builder Business size, we get both for $119.
That's correct.
Wow. So you get a Website Builder for free for $20, really.
Pretty much.
Does the Website Builder Business come with the hosting? Is that part of the package?
Yes.
Okay, so you've got a brand new website with hosting for $20 for a year. Yeah, I like that deal.
Email.
And your own email to go with your domain. I like that. eBay Radio is the promo code, and they would get that deal on GoDaddy.com. Correct?
That is absolutely right.
I like your presents, Priyanka. You have good presents. All right. And that's a pun. You have good presents, presents, and you have good presents, pres. I forget how to spell it. Okay. All right. We do have some last minute questions from AM. Can we get our cost of goods from our receipts?
I'm guessing you're saying you bought stuff and you have receipts for that, and the answer would be yes. That's how you would.
Yeah.
Sorry, go ahead.
No, you're fine. I think we're on the same page. That's the basis of cost of goods, and there are some other things that you can consider into cost of goods. Basically, let me see if I get this right, Priyanka. Anything that you have to do or buy to get your goods ready to sell, it's considered cost of goods. Is that the right definition?
Absolutely. One caveat I would add is gift wrapping is counted only if it's essential to the product.
Okay.
So, yeah.
So examples of other things that go in cost of goods. I'm thinking if you have to buy envelopes to put them in to sell them. What other some examples of cost of goods fees?
Any labeling you do, or let's say you spent, let's say you buy the box, let's say you like package things together. So you buy, like China, and then you also buy sort of forks and knives, and together you package them. So then the box that you put them in would count. And let's say you write a little manual or whatever about the product, that also counts. Anything that goes into making the product ready. Let's say you bought pretty writing pens to decorate the product and stuff. Anything that adds to the product goes.
Okay, excellent. Ty has a good question. Maybe this was already answered, but how do we address refunds and returns on our taxes? Where does that get deducted? Great question, Ty.
Yep, great question. And there is a section right after gross receipts, as you see, actually, apologies. If you see in the screen that I'm sharing right now, it shows the Schedule C, right? The first thing is gross receipts. The second is returns and allowances. So that's where it will go.
Awesome. Okay, Dana wants to know if we have a phone number for existing customers needing technical support.
Actually, yes.
Ah,
So so you can go to GoDaddy.com and there's a phone number for the general, like if you just want to talk about any product.
mhm.
GoDaddy Online Bookkeeping actually has its own phone line as well.
Very
Uh,
cool.
yes, let me pull up that number though. So one,
Awesome, because all of us are like, oh, I want that number. I hope it's extra hard staffed from now till the 15th.
that's a really good point. Okay, just hold on 1 second and we'll find
Absolutely. We'll watch you go live.
it.
Here we,
Wait.
that's what they always tell you not to do in webinars, guys. We're going live.
Wait a minute. Mm.
I love it. Okay, get last chance, guys. Get your questions in. I'm glad that helped you, Ann. She says she's all good now.
Oh, goody.
Yeah.
Wait, I'm just finding the number, please.
And if you guys have friends who are still, like the rest of us, procrastinating, we are going to repeat this webinar next Friday at the same time. So if you have friends or relations or frenemies who are still struggling with taxes and need some help, they can get some more help from Priyanka next Friday at the same time. So Friday, April 11th, 4 days before T-Day, tax due date. Okay.
Sorry. I just need a second.
All right, we're good.
All right. So the number
Okay.
is it's 480
480
463
463
8841.
8841. Excellent, excellent, excellent. Okay.
And for any reason, if and it's like difficult or something happens, if the simplest thing is to go to the GoDaddy website, dial the general number there, and ask for the GoDaddy specialists, and they'll connect you to.
Fantastic. So you can use the 800 or whatever number that GoDaddy has up on their site and ask to be referred to an online bookkeeping specialist, or you can dial 480-463-8841. What about the Facebook group? Are they still providing some support through that?
So we man the Facebook group and answer any questions as we can. It might not be the most prompt, but you get a response.
Okay, so if you don't need it right away, you don't want to call, you can go to facebook.com and search for the group Outrighteous is the name of the group.
Absolutely.
All right. Okay, I think we've got them either they're all stumped or they're all working on their taxes and ignoring us, one or the other. So they're done.
Awesome.
Thank you so much for your time, Priyanka. I know how busy you guys are at GoDaddy Online Bookkeeping at this time of year. I'm really excited and grateful that you took time out of that craziness to come help us at the last minute. Herb does have one last question. What about the cost of ruining things at your place as heat? I'm sorry. Cost of running things at your place as heat or energy. The N got left out, so I couldn't decide if it was ruining or running, but I think he meant running. So that would be part of your home office deduction, Herb, I believe, Priyanka, if you do it the long way.
Yes, it'll go into the utilities and stuff.
Right. I mean, if you have a separate building, a building that's your business, then all of those expenses for that building are business. If you're running your business out of your home, it's the same thing. If 10% of your square feet is your office, then 10% of your electricity bill is home office deduction, that kind of thing.
Exactly. And there's the simple way of doing it, and then there's the hard way of doing it, which is standard deduction at like $5 per square foot up to $1,500, or you do the actual method.
All right, Herb says that got it. That was what he wanted to know. Okay, guys. See again. If you're not done by your taxes next Friday, young lady, y'all come back, and the rest of you let your friends know. We'll be back next Friday, same time, same place. Sign up at pagemage.com/top rated seller webinars. Thanks again, Priyanka. See you next week.
Thank you. Bye.
Bye bye.